Hey traders, looking at Peloton again, I don't think, I know I did a video on the 10th after the debacle from the price action debacle that happened in the stock and all the other COVID stocks based on the headlines from on the vaccines. I believe that was the Pfizer headline. And then again, with, I believe it was Moderna headline, a week apart exactly. So this was one, this was the other, um, and thereabouts somewhere. This was definitely one. Pfizer's headline just clobbered all of them. I did the video. My note was there was some good news, there was some bad news, and part of the bad news was I said it would be tough to eat into the open gap. I likened it to Intel, but I said it's not Intel. I know this is not Intel, but when you do have a big gap like this, it's going to take a lot of convincing for people to jump back into it, especially because of these candles. So, and that was right here. This is a daily chart, and it was at this candle when I did the video. I'm going to try to put a link at the end to that video so you can go back and see how I drew some of these arrows in this one to scare people away. Now I'm looking at it. This week I issued a long 2 days ago to the group, so you can sign up to the group down below, an alert to get long, and that paid right away. The types of trade was a couple of credit put spreads and sold puts for those who want to own shares, and those who like to chase upside. It was a buying a naked call, which is my least favorite, and buying a call spread, which is way better than a naked call to suit my style. I'm not a huge risk taker. I prefer to plan around a certain scenario. And buying naked calls, great profits if you don't have bad days. On bad days, you're going to see a lot of red. And if you don't like seeing a lot of red, then you should do a call spread, debit call spread, which is bullish. Okay, doing both, a credit put spread and a debit call spread, is really bullish, and that's probably the best thing to do. But anyway, that trade, the immediate profits are in, so somebody can just book it and walk away. But somebody that likes to trade the stock and wants to be in it for the long term, they can ride it out. So logic says that it might revert to the mean higher. However, there are challenges. Coming into 108 is going to see a lot of selling, 109, 110, 112 for sure, because that was the failure from here. So now we have things to shoot for, where to get out. Let me see if we can get smarter with the candles. Definitely some selling right here into 108. So there's resistance all the way through. They're fighting to hold the neckline they fell into. The good news about it is these tails say, nope, what are you doing? Let's get out of here. Confirmation of it here. The bad news is if you do lose this zone, then the consequences are severe. I did it last time. Nobody wants to see it. So please, I'm not calling for this to happen, but this will happen if they lose that footing. There's going to be a battle in the pivot zone, but look how fast it came. It's easy to erase fast moves in order to legitimize them. So even if it falls down to here, the bulls will remain in control. This is a weekly long-term chart, and it would be a buy the dip moment. So if you're in it for the long term and you don't mind to see red, don't be panicking, because if it falls into here, I'll be a buyer, definitely. 70 was an absolute tabletop. You can literally see it. Look left and you'll definitely see it. But there's a zone. There's no other tabletop because it didn't have a chance. It was voop, 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 voop. That creates weak hands. Sometimes I like to price them out to transfer the profits from one person's pocket to another person's opportunity. So if I wrote it all the way up here and I sold it fast, is that bad? No, it's good actually. So somebody else that missed it from here says, you know what, I missed the whole thing. Let me catch half of it this time. So Fibonacci 50%, eyeball the move, whatever. Drops are fine as long as the higher lows trend is still here. It might as well take these out. Duh. So I'm not calling for this. I'm just sharing the downside. So tight move here. If you want to draw different scenario on Hyatt Hotels, question from the chat room, which by the way is also part of the service. So check this out. What is this? We said a daily candle. I don't even need to. So how do they say this? Stuff gonna happen here, folks. This or retest the low one more time. So if I want to get long and anticipate, I would don't take a whole size a full size position, because I don't know. Flip the coin. If markets fall, you think this is going to rally all by itself? Maybe, maybe not. It depends on the headline. So logic says I like to see breakouts from levels, which is this. Other people like to see breakouts from trends, which is this. As soon as they see a poke above it, let's go. I have a better luck chasing breakouts from levels, but that means I miss a little bit. And that's fine with me. It suits my personality. I would love it to get into a long position on a dip. I know that there's going to be support, so my assumption is that there will be support until I'm wrong. So what does that mean in plain, simple English? I will buy the dip and stop myself out if I'm wrong. How do I know I'm wrong? It loses these last bounces. Then I'm wrong. I get out because I might write it down. How far down, I don't know. It could be a little bit. It could be a lot of bit. So better to, what do they say? The first loss is your best loss. It really doesn't make sense how they say it. But the concept, don't wait and hope. If you're, the reason why you get into it. The reason I buy the dip here is because of support. If that reason's gone, I get out. I'm gone too. The reason I chase is because I have a trigger. I don't have a trigger, that there's no trade. Some people like to anticipate. That's fine. So how about this? If I'm in it for the long term, if I want to own Lulu for the long term, I go out, I buy shares, or I go out in time and I buy calls or call spreads, $10 wide, out in time, like I did with Boeing. I don't have to sweat every tick. So jumping the gun, that's fine, because I'm not in it for a scalp. But if I'm in it for a scalp trade like I did 2 days ago, then timing is important. Those are my 2 cents. Nothing here is a recommendation. Absolutely nothing. I'm just sharing how I set up things, and they suit my style. Other people will call me an idiot for thinking like this. I should do that or that. It's fine. If it's working for you, that's great. This is my style. Of course, I don't take any trade I don't understand, and I don't place bets bigger than I can take losses.